Is a company with less than $2 million in trailing revenue truly the missing link for the global AI infrastructure boom? Or is Wall Street blindly pricing a $2.2 billion Mirage built on, dilution and missed promises?
Well, the artificial intelligence revolution is it's slamming into a physical wall right now. Investors are scrambling. They're frantically hunting for the exact moment the fundamental plumbing of the internet gets upgraded.
Right. And so in this deep dive, we are looking at a huge stack of sources. We've got SEC filings, the Tech Insights 2026 Semiconductor Outlook, and a very divided pile of analyst notes.
Yeah, deeply divided pile.
Exactly. Our mission here is to figure out if PoET Technologies is actually holding the keys to the future of AI, or if they're just selling you a very expensive light-powered dream. We're cutting out the engineering jargon to get to the actual business reality.
Because to understand that wild valuation, you first have to understand the specific bottleneck they are claiming to solve.
Okay, so let's start with that problem. You can think of AI chips today like a fleet of Ferraris stuck in a dirt road traffic jam.
That's a good way to put it.
Right. Because the processing power of the chips themselves is incredible. The GPUs are screaming fast, but the traditional copper wires connecting these chips simply cannot move the data fast enough to keep up.
No, they can't. When you try to force that much information through a copper connection, it overheats. It consumes massive amounts of electricity.
It's a physical roadblock. It is literally like trying to run a high-speed bullet train on 19th century wooden tracks.
Yeah, and the solution to that dirt road is light. Paleo Technologies builds what they call an optical interposer. So instead of electricity pushing through heavy copper, it's a digital superhighway that uses photonics.
Light.
Right, light, to connect the chips. It is vastly faster, it generates just a fraction of the heat, and it uses significantly less power.
But using light isn't the real breakthrough here, right? Because other companies use photonics. The actual business relevance, the reason anyone cares about this specific company, is how they build it.
Exactly. The entire optical industry has a massive choke point right now. Assembling these optical components is an incredibly slow, manual, and expensive process. It requires something called active alignment.
Okay, wait, stop right there. I see active alignment thrown around in these analyst notes constantly as the big villain. But practically speaking, what does that actually mean on a factory floor?
Well, imagine you have a microscopic laser, and it needs to fire a beam of light perfectly into an optical fiber that is, thinner than a human hair.
Wow.
Yeah, you can't just glue them together. You actually have to turn the laser on, that's the active part, and slowly, microscopically adjust its position until the maximum amount of light is successfully passing through.
Are there literally technicians in clean rooms looking through microscopes doing this?
That is exactly what it is.
Yeah.
And once you find that perfect spot, you lock it in place. It takes minutes per single component.
Minutes. In semiconductor manufacturing time, a few minutes is an absolute eternity.
It is an eternity.
Yeah.
And it scales terribly. You are essentially handcrafting microscopic connections. POET's entire mission is to eliminate that completely.
So they want to manufacture these optical engines exactly like standard computer chips.
Right. They are designing them to be alignment-free, produced at wafer scale.
So instead of building them one by one under a microscope, you just stamp them out by the thousands on a single silicon wafer. That unlocks the mass production you need for these massive AI data centers.
Exactly, and it fundamentally changes the economics of the hardware, which explains the explosive market reaction we're seeing. The timing is just critical right now.
Right, because the Tech Insights 2026 Outlook identified this exact moment as the critical inflection point for silicon photonics. AI data centers are hitting a hard power limit.
They literally cannot draw enough electricity from the grid to run the next generation of AI models on legacy copper architecture. The power companies just cannot give them enough juice.
Which means investors are betting PoET will become the default plumbing for AI clusters. The thesis is super simple, right? Whoever solves the optical manufacturing bottleneck becomes a mandatory partner to every major tech giant.
Yeah, if you hold the key to cheaper, faster, mass-produced optical engines, you basically own the infrastructure of the future.
So let's lay out the strongest possible case for PoET winning this race. It relies heavily on recent commercial validation. For a long time, this was just, a compelling engineering theory.
But the narrative shifted dramatically in early 2026. You really have to look at the cash war chest they just secured. They got a massive $400 million capital injection from a single institutional investor.
And they did it at $21 a share. That was a premium to the previous closing price at the time. I mean, that proves serious, smart money is betting heavily on their survival.
Right. An institution does not hand over $400 million at a premium unless they see a clear, undeniable path to commercialization. They looked under the hood and they liked what they saw.
And that path is solidifying with the recent Lumilens partnership. This isn't just a vague memo of understanding. It comes with an initial $50 million purchase order.
Yeah, and for a company that generated $1.4 million in revenue over the trailing 12 months, a $50 million order is a fundamental reality shift. It moves them from an R&D lab to an actual commercial vendor.
Plus, the commercial framework surrounding that order is massive. The filings outline a path that could scale to over $500 million in cumulative purchases over the next 5 years.
Right, because they are co-developing an electrical optical interposer designed specifically for frontier AI infrastructure. And the momentum extends beyond just one partner, too.
Yeah, they have a joint development program for a 1.6 terabit transceiver with Lessengers. Wait, let's pause on that. A 1.6 terabit transceiver. Translate that into English for me.
Sure. It's all about data throughput. As AI models get larger, the chips have to talk to each other constantly. If they can't communicate fast enough, the entire system just sits idle waiting for data.
So a 1.6 terabit transceiver can move 1.6 trillion bits of data per second.
Exactly. It is the absolute bleeding edge of networking speed required for the next generation of GPU clusters.
And the fact that POET is co-developing this alongside Lessengers and simultaneously collaborating with Lithium, which is a major provider, shows they are embedding themselves deeply into the manufacturing ecosystem.
Yeah. And the reason POET specifically could win this photonics race, despite massive incumbents in this space, is because their platform attacks the core economic problem.
Right, the labor costs.
Exactly. If they can truly scale their capital-efficient manufacturing alongside the rapid growth of hyperscaler GPU fleets, they change how the market operates. By removing the limits of active alignment, their profit margins at scale would theoretically dwarf the legacy players.
Okay, I have to slam the brakes on the hype here, though, because this all sounds great in a lab, but I am looking at their actual financial statements, and it is an absolute bloodbath.
Yeah, the numbers are rough.
You cannot pay employees with press releases. In the last 12 months, POET generated a mere $1.41 million in revenue, but they posted a staggering net loss of $81.65 million.
The cash burn is immense. When you are burning $80 million to generate $1 million, the math catches up with you.
And how does a pre-revenue company survive that kind of burn rate? Through extreme dilution. The share count has skyrocketed by over 63% in a single year.
Yeah, management is constantly slicing the pie into thinner and thinner pieces just to keep the lights on.
Let's talk about that dilution, actually, because that $400 million raise we just talked about, it comes with big strings attached. It includes warrants that could add another 19 million shares.
Right.
And furthermore, the Lumilens deal includes warrants for up to 22.9 million shares at an 8.25 exercise price. Explain the mechanics of these warrants to me.
Sure. Think of a warrant as a contractual IOU. It gives someone the right to buy newly printed shares at a specific locked-in price, regardless of what the stock is trading at on the open market.
So if I am a retail investor and I own the stock and the company succeeds, shouldn't I be happy they have these partners? How does this actively cap the stock price?
Well, say the stock rockets to $25 on good news. The partner holding those warrants exercises their right to buy millions of shares at $8.25.
Oh, wow.
Yeah. The company is forced to print those new shares and hand them over. The partner then immediately dumps them on the open market for a massive, risk-free profit.
So that sudden influx of newly printed shares dilutes the value of your existing shares. It floods the market with supply, forcing the price back down.
Exactly. Every time the company creates underlying business value, millions of new shares stand ready to act like a trapdoor.
That is a terrible setup for a retail investor. But it gets worse because there are glaring execution and trust risks here, too. There's a massive red flag from the legal front.
Yes, the lawsuits.
Right. According to the filings, class action lawsuits are swirling, specifically alleging that the former CFO's public statements breached confidentiality.
And the allegation is that this blunder resulted in losing every purchase order from a major partner, Celestial AI. That reportedly cost investors $7.15 per share in lost value.
When you are a pre-scale company asking the market to value you entirely on future promises, trust is your most valuable asset. Losing a major client over a careless confidentiality breach is brutal.
It makes you question the operational maturity of the entire executive team, which leads directly to the ultimate threat in the bear case. Poet has a documented history of execution slippage.
And they are operating in an industry with massive, well-funded incumbents. Companies like NVIDIA, Broadcom, and Marvell are not just standing still.
No, they aren't. If those larger players compress their pricing or accelerate their own competing modules before Poet hits high-volume production, the window of opportunity simply closes.
Poet will just brain through its cash, fail to secure market share, and be forced to dilute shareholders even further. Which brings us to the most important question.
What exactly must happen for today's valuation to make sense?
Yes, because I am looking at the price-to-sales ratio, and it is sitting at an astronomical 1,550. The enterprise value is $1.77 billion on barely a million in sales. I can't wrap my head around paying 1,550 times sales for anything.
To justify that valuation, press releases and design wins are no longer enough. The market has already fully priced those in. That $50 million Lunalens order must actually translate into shipped, repeatable physical products.
They have to prove that they can manufacture these interposers at scale with high yields and reliable margins, and the timeline on this is completely unforgiving.
Very unforgiving. According to the development roadmap, engineering samples from the joint program are due in late 2026.
Which means the company absolutely must hit flawless high-volume production aligned with hyperscaler customer deployments in 2027.
Right. If there are any delayed conversions, any margin pressure, or any manufacturing hiccups over the next 2 to 4 quarters, the multiple will instantly compress.
The stock will just get crushed. You have to understand that the current stock price demands execution perfection. Any stumble, and the floor falls out.
Looking at the current reality of the business metrics, though, management is clearly trying to mature the operations.
Yeah, they announced a planned redomiciling to the United States. They state this is primarily to eliminate adverse PFIC tax consequences for American shareholders.
Right, the PFIC issue.
Honestly, PFIC sounds like a banned industrial chemical. What exactly does this mean for an investor's wallet?
Well, PFIC stands for Passive Foreign Investment Company. It's a really complex U.S. tax classification. Basically, if you are a U.S. investor holding shares in a foreign company that is essentially sitting on a mountain of cash relative to its actual business operations, the IRS hits you.
Hits you with what?
Incredibly punitive tax reporting and much higher tax rates.
So it's like paying a penalty tax just for investing across the border in a pre-revenue company.
Exactly. Removing that PFIC status eliminates a massive headache for institutional money in the States. It signals a shift from a speculative foreign small cap to a serious U.S. infrastructure player.
One that institutional funds can actually hold without destroying their tax efficiency. And the one undeniable positive for the immediate future is the balance sheet. It is entirely fortified.
Yeah, they are sitting on $429 million in cash against practically zero debt. They have a net cash position at 2.45 per share.
So bankruptcy is off the table for now. They have bought the runway they need. The existential threat of running out of money tomorrow is completely gone.
It is, but the market sentiment is still a massive tug of war. The stock has a beta of 0.73, which theoretically means it should be less volatile than the broader market.
Yet it experiences violent pullbacks, and over 13% of the float is currently sold short. A 13% short interest is huge for a company trying to become industry-standard infrastructure.
That high short interest tells you the market is deeply divided. You have the true believers who see the transformative potential of AI optics, and you have the skeptics heavily betting the company will trip on its own shoelaces.
Right before ever reaching commercial scale. It is a high upside, high fragility setup, which means we need a definitive decision right now, based strictly on the risk and reward profile for an intelligent retail investor. Buy, hold, or sell, we are not hedging this.
The definitive verdict is hold D, and there are exactly 3 reasons for this.
Okay, I get the cash runway argument. That's reason 1. They aren't going bankrupt tomorrow. With $429 million in the bank, POET has bought the necessary time to actually build out their manufacturing infrastructure.
Yeah, and execute the Lunalens order. But having money in the bank doesn't justify a $2 billion valuation when you are making less than $2 million a year in sales.
That math just feels entirely disconnected from reality. Which brings us to the second reason, the current valuation prices in absolute execution perfection.
It's exactly. At a $2.2 billion market cap, there is zero margin of safety for the inevitable manufacturing hiccups that plague scaling operations.
You are paying tomorrow's premium prices for today's unproven execution. If they stumble even slightly on yields, the stock has nowhere to go but down.
Which brings us to the third reason. Even if they do execute perfectly, you are fighting gravity with the share structure.
Right. The heavy dilution overhang acts as a hard ceiling on the stock.
Between the recent registered direct offering warrants and the Lumilin's partnership warrants, any massive spike in underlying business value will be aggressively diluted.
And tens of millions of new shares entering the market. For tactical investors, this is a stock to accumulate only against proven execution milestones, not narrative hype. You need to see actual shipped products.
Not just press releases about potential partnerships.
The physics of the AI revolution are undeniable. The future of data centers will absolutely be built on light, but, that leaves you with one final thought to chew on.
What's that?
If photonics truly replaces copper over the next 5 years, it won't just change data centers, it changes the global demand for raw materials. If AI infrastructure scales on light instead of heavy metal, what happens to the massive mining conglomerates betting the farm on endless miles of copper wire?
That is a fascinating ripple effect.
The future of AI might need photonics, but whether it needs POET technologies or if shareholders will just be left paying for the research and development of a dream remains the $2 billion question.